Let's bring in the man himself, Eric Criscuolo, market strategist right here at the New York Stock Exchange. My man, this is the whipsaw action. These are the days you need a neck brace to try and keep up with the way the markets are trading. What did you see on this kind of bizarre tape today as we head into the long holiday weekend?
Yeah, I mean, we came in, futures sold off hard overnight on, after President Trump spoke to the nation, basically not giving any update that he hadn't said before. The commentary kind of stuck to the script of what he and others in the administration had said. But then, kind of coming into the morning, we kind of saw another maybe off-ramp kind of appear. And that's, with Iran looking to maybe work with Oman to reopen the strait. I mean, who knows where that leads, but these little off-ramps, these de-escalation points, this is what the market is telling you they want to see, because right when that happened, we just ripped higher, we erased pretty much all of that overnight loss, and we traded basically in a line for the rest of the day.
Yeah, we're over a few of these key psychological levels, so as you and I are standing down here, we can take a look up at the big board. West Texas priced over 111. Brent above 108. We do have a little bit of relief in the Dixie because the dollar had been above that psychological level of 100. What are some of the other pressure points that you've noticed have been of top concern to investors, really especially over the last 4 to 5 weeks?
Yeah, oil, absolutely. And all of the downstream, parts of oil, whether it's plastics and all the other supply chain pieces that feeds into. It was interesting that oil was up sharply today, as you said, but yet the market kind of rallied and was, flattish. So that's kind of interesting. You kind of, one of them might be wrong, right? The oil guys and girls or the equity guys and girls, one of them might be wrong there, but we're going to have to see. But oil definitely is a pressure point. Yields as well, global yields.
Oh, yeah.
Global yields took off, have been much higher for over a month since the war began. This week they kind of came in a little bit, especially in areas like the UK. And so as the yields kind of came in, that just supports equities generally speaking. So you saw kind of that action help as well.
Yeah, of course, and at least you and I are taking a look here at Treasury performance today. It looks like on the mid-end of the curve kind of up, but the longer duration instruments, our 10-year kind of settling down. It's an interesting day tomorrow because the equity markets are closed. Of course, we got the 3-day Easter holiday here, but we do get a really important jobs print, and finally an updated jobs print, not one of these ones that comes from many months ago. We're talking the March jobs print, but we don't get to react to it as investors until Monday. Interesting setup. What are you looking for the print?
Yeah, well, I mean, if you go by just what the weekly print had today, the initial jobless claims, they were solid. They were just above 200,000, continuing that trend of low higher, low fire. The monthly prints have been up and down. They've been a little erratic.
Yeah.
So, but kind of based on what we've seen, coming into it, wouldn't be surprised if it was a generally decent print. But again, I don't know. But it wouldn't shock me either way. But it kind of feels like it'll be an okay print. But we'll find out.
I mean, you talk about volatility in the broader markets, but volatility for the jobs numbers. January crushed the cover off the ball. February was a negative print. And so maybe you have a little bit of mean reversion for the March numbers we'll get tomorrow. Speaking of data points, next week, for the next time I see you, we get PCE, the Fed's preferred gauge of inflation. Kind of a little rear view mirror looking, but then a pretty updated CPI print. Is there one of those two you think investors are more likely to latch onto more than the other?
Yeah, I think CPI is going to be more important only because it is the March CPI, right? So you're going to have the Iran war in that entire data set, whereas the PCE is going to be February. Very important, that's the Fed's preferred gauge, but it's not. It's backward looking, right? Especially backward looking compared to the PC or to the CPI, excuse me. So yeah. I think markets will be more attuned to the CPI print just because it's an updated number.
Yeah, Eric, before I let you go, we always say earnings are the lifeblood of these markets, but what happens during these wonky weeks where we've wrapped up tech, we've wrapped up retail? We're not quite yet when the big banks and the big financials will report. That's a little later on in April. So for a week like this, is it just listen to what Fed speakers have to say and kind of pick and choose what drives market price action?
Yeah, I think so. I mean, obviously, Iran front and center, right? Oil prices, Treasury, global yields. That's going to be the assets to watch. But yeah, very quiet on the earnings front. You could see kind of companies pre-announce a little bit, or maybe get in front of news. Companies that have been under pressure, maybe they put out their numbers early, saying, hey, everything's actually okay. It's jump back in the water. So I think you might see some pre-announcements, but definitely the street are going to be kind of configuring their models, trying to figure out where numbers are going to come out. Do they start to cut estimates going into the prints? Do they kind of just hold tight? So you could see some kind of gyrations as far as where the estimates go. But generally speaking, next week quiet. The week after, the big financials start reporting, and that's when all the economic commentary from those institutions will start to kind of hit and move markets maybe a little more than the macro stuff.
Eric, you did such a great job this week. Take tomorrow off. You've earned it. We all have down here at the New York Stock Exchange.
I'm going to make sure my bosses know that.
There you go. I'll make sure your boss is watching the show. Enjoy your 3-day weekend. I'll see you back here on Monday. Thanks for kicking us off as always.
Always a pleasure, JD.